Bitcoin has just seen an incredibly bullish weekly candle close, and with the monthly candle close just 2 days away, things are starting to heat up. Are the bears correct, or will Bitcoin continue upwards? Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. I hope you're all having a fantastic start to the week. In today's video, we're going to be discussing the short-term, mid-term, and macro charts, discussing what is happening on the immediate time frame, where Bitcoin is likely to go next, and the key levels you should be watching out for. We'll also be going over the weekly candle close, what it means to the macro price action, and how the daily charts are indicating a large move upwards could be coming. And finally, we're going to finish up on the monthly charts, discussing the upcoming monthly candle close, and of course going over a key technical indicator. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. This channel is on a temporary break until the 1st of February. If you're interested in taking it a step further, you can join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and of course, you'll get access to our group chats, our general chat, trading chart and education chat, news, help, video, and trade setup chat. If you're interested in getting access to all of that, you can contact me in the pinned comment, or more importantly, if you're interested in getting access to the current sale we have, just head over to the channel. The most recent message will have all your details. Let's go ahead, guys, and jump into the video. So starting on the market data, how are we looking? At the moment, guys, 24-hour volume is up 13.15%, sitting at a total of 87 billion. 24-hour liquidations are down 7.91%, sitting at a total of 98 million. Of the 98 million, a total of 29 million came from long positions, and 69 million on the dot came from short liquidations, as Bitcoin broke through that initial level of major resistance, which is known as that point of control, the POC level on the VRPR. So that nice little break upwards over here resulted in about $90 million in liquidations, or should I say $69 million in liquidations on the short side. So pretty brutal for a relatively small move. Moving on from there, looking at the DXY, the DXY isn't looking fantastic. It is starting to look weak as we have these larger wicks toward the upside, and our bodies are becoming smaller in these candles. It does represent overall exhaustion, which is expected moving into the FOMC. And of course, the FOMC meeting is going to be our next interest rate decision. And by the probabilities, there is a 3.1% chance of a pullback, of a reduction in interest rates, and a 96.9% chance now we are going to see another pause, or should we say no change in interest rates. And of course, like we discussed in yesterday's video, the result of this is only significant if we see a result other than a pause or an ease. If we see a hike, that is going to be very, very bearish. If we see a pause, the expected narrative, which is that Federal Reserve will eventually reduce interest rates in 2024, will remain intact. That narrative will not be shifted, and thus the market will still be moving bullish in as expectation for that narrative. So if we see a hike, very, very bearish, very unlikely. No change in ease should be bullish, and of course, if we do see an ease, that will be exceptionally bullish. Moving over to the DXY again, we can see we do have a level of support, which is going to be our 50 EMA, and this horizontal base of support. A loss of a level will result in a correction back down to a major support level. While we sit above these levels, again, support is support until it's not. We do have the possibility of move upwards. However, we are exhausting quite rapidly over here. Excuse me. So it isn't looking fantastic unless we get particularly bullish news on the FOMC meeting for, again, the dollar. But again, bullish news for the dollar is bearish for asset prices. Moving over to the S&P 500, we can see it is looking fantastic. It is sitting at 4,950, moving very easily up to our 5,000 target. We still expect a 5,000 retest in the next coming weeks. Of course, this is going to be a major level of psychological resistance. Provided this local low, which we can see at 4,737, is able to hold, we are expecting to continue upwards into that 5,000 range. If at any point we come back down and break below this level, that is when we expect a higher time frame reversal to develop. The same thing goes on the Dow Jones over here. We have that higher time frame level of support that we are developing right over here, that local low range. If we do break below that low, expect a correction to retest our prior all-time high. Until then, we are in price discovery. We are an aggressive uptrend. This is upward accumulation, and we are moving towards that $39,000 whole number psychological level of resistance. So overall, looking pretty good. The markets are looking strong. The potential for an interest rate ease is starting to build. Overall narrative is bullish, as it has been for the entirety of 2023 and now moving into 2024. So before we get into Bitcoin and all of the stuff we're going to be discussing, a quick word from Bitget and BingX and we'll dive in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and jump over to Bitcoin. So let's start on the daily, the short time frame, and build up short time frame, weekly, and then finish up on that monthly chart. So as we can see in the short time frame, we have had a break over our key resistance. The key resistance is going to be the POC. Now, the VRPV, which is the indicator we are using on the right-hand side, for those of you who don't know, it is a horizontal scale indicator that reflects, or should I say describes, historical trading volume within a particular price range on a horizontal scale. So it's not vertical volume, it's horizontal volume. So at this particular price point, how much volume has there been within these two particular readings? And in this instance, we have row size on 200. So it's a very small and very accurate reading. So it indicates areas of liquidity and, more importantly, areas of support and potential areas of resistance. So it's a very, very fantastic tool. What we are looking at here on the VRP are two particular areas. Number one, we are looking at the area above and below and the POC itself. The POC itself is called the point of control. It is the red horizontal line. It represents the largest area of historical orders, total orders, okay, in the visible range which we are viewing. The visible range, the VRPV, okay, visible range volume profile, is essentially the entire visible range of price action that we are seeing on the monitor right now. If we zoom out, the visible range becomes larger, thus the VRPV adjusts. So when we're looking at the VRPV and we're doing analysis on the VRPV, we generally want to have the range of relevance, okay, the range of relevance in our viewing at any given time when we're doing analysis using the VRPV, so it doesn't take data from prior structures or prior consolidation ranges, which are irrelevant or which could potentially give us inaccurate reflections of what is happening or sway our analysis in certain ways. So in this instance, guys, we have broken over the POC. The point of control is a shifting point. It is a point where we swap from, again, increasing resistance to potentially decreasing resistance, not potentially, but actually decreasing resistance. We can notice over here, we do have a small valley in the VRPV, which with another near equally as large peak as what we had on the POC itself. This area is acting as the next level of resistance, okay? The most important level we can see here on the POC is going to be this prior high point. This high point here, we can see this horizontal line right over here, which acted as a resistance numerous times. And we can see it's very important as we get above this level, the VRPR significantly drops off. This indicates this area is a major area of resistance and a major bullish trigger point. Meaning, if the price action is able to break above 44,260, that is going to be the trigger for a continuation back up into the 46 to 48k range. So we'll say it again. The 44,260 level is the trigger point for a continuation up to 46 to 48k. On the short term, we are currently traversing in an overall uptrend. The uptrend is represented by this diagonal red trend line. We can see as per the uptrend, the price action is still respecting that trend line, and thus the trend is still moving upwards. On the short term, we can see with the price action breaking the POC, we have retested our local range high resistance, which we developed back over here on the 17th of January, a short-term resistance point which temporarily wicked up into that peak of the POC and rejected at the 50 EMA. So overall, we are now retesting resistance in a uptrend. We have again the moving averages underneath the price action, which reflects overall strength, but we have not broken through his major trigger points to actually facilitate a strong move upwards. So like we said yesterday, guys, until we start breaking through his levels, the higher we move into these areas of resistance, the greater the probability of a short-term reversal develops. So you should not be looking at this price action now and saying, okay, I'm going to stack massive amounts of longs over here for Bitcoin. Your longs should have been taking on deviation. They should have been taking on breakout of the 50 EMA, okay? If you're stacking massive longs over here, you're moving into a level of resistance and you're taking longs late. That doesn't necessarily mean you might not be right. Bitcoin could go upwards, but applying that strategy over numerous amounts of trades, you're more likely to be wrong in the net amount than again on the small amount, which means the strategy itself of buying at resistance is overall not a very smart strategy. Even if it works out once, the exception doesn't prove the rule. So keep your eyes on that, guys. If we see a breakdown of this trend line, that will push the price action back down to retest this area of support. Again, this area is an area of support. So if we do bounce and break down from this trend line, we could see a bounce back upwards. We only start to flip bearish again on Bitcoin when we break below 40,000 and more importantly, 38,000. This area is a major high time frame level of support. So that takes us over to the weekly chart. If we look at the weekly chart, guys, we have seen a massively bullish candle bounce from the major $38,000 to $40,000 horizontal support level. This is the most important level of support currently on the chart within close proximity of the price action. This is the most significant area of resistance on the chart within close proximity of the price action. If we look at the price actions really doing, we are bouncing between the 40 to 38 to 46 to $48,000 resistance. This area of resistance, we are developing a consolidation above 40,000 but below 46k resistance. If we look at this weekly candle close, we saw a steep, sharp correction into this range with actually closing that weekly candle above. Not only, guys, we didn't only close it above that support level, but we closed it, okay, this is important, below the opening, above the opening price. We'll go ahead and draw it in, okay, of the prior weekly candle. So we can see over here, the opening price of the prior weekly candle was here, and our closing price for that weekly candle was here. So that's about a $300 difference in the closing price of the prior weekly opening price. This signifies strength. It signifies a reversal is developing, which is what we are seeing. But how can we see a reversal actually developing, and what are we looking out for? Once again, guys, we are looking for three things. We look for three things when we look for reversals. We look for continuations. We look for trend, we look for structure, and we look for strength. Okay, now these don't have to come in a particular order. Sometimes we can see positive strength while the price action is still in a downtrend. Okay, sometimes we can see a bullish structure while the price action is still in a downtrend and doesn't have strength. Sometimes we can see strength, while the price action again is showing visibly that we are in a downtrending structure. So they don't have to happen all at the same time, but generally we want to have 2 out of 3 or 3 out of 3 validations to tell us that we have overall uptrend or we have a confidence trend in Bitcoin. So what are we seeing right now? Well, the short-term trend, okay, was down. We had a short-term downtrend represented by this downtrending diagonal trend line. That downtrend broke upwards. We're in a short-term uptrend, and we know we are now in a short-term uptrend as we've developed that uptrending diagonal trend line as per this red line. Structurally, Bitcoin is neutral. We are in a neutral structure as we are in a sideways consolidation, okay, above the 40,000 but below the 46k resistance. This is our structure right over here. If we go ahead and delete everything on the chart, we have a structure which represents something or less like this, okay? We have that 46k resistance and that 40k support. We are moving kind of sideways with above deviation and below deviation within this price action range on the higher time frame, okay? And if we look at our strength, the RSI is reflecting overall downtrend. It is reflecting that the momentum is negative. But here is a very important thing. Although the momentum is negative because we are moving downwards, we have this phase over here where momentum has started to move upwards. This actually indicates, okay, we have momentum which is spinning around from negative to positive. We have strengthening negative, or should I say, we have weakening negative momentum. So weakening negative momentum is when you have downward momentum, okay, which was gaining strength, and it starts to exhaust, and it's only exhausting because positive momentum is starting to increase. If we see a breakout of this RSI trend line, that would indicate that momentum has slipped from negative to positive, and that is going to be a very strong validation point, okay, for Bitcoin to push back into the 46 to 48k range. Why? Okay, because the bearish divergence high was created within that range over here. So a break above this trend line would indicate we now have positive momentum, which will likely push Bitcoin back to retest 46 to 48k. And we know already if we break over 46 to 48k, we are going to be moving to our next target, which is 52,000, and thus continuing upwards, as this is a major yearly level of resistance. Now, like we've said, guys, there's a lot going on the charts, and there's a lot that could happen, and nothing has been yet confirmed. And that's why right now emotions are very high. Okay, if you really zoom out, a lot of people are saying we're going to 20,000, and there's no evidence. Just to stay straight up, I'm not a bull, I'm not a bear, I'm an objective trader. I don't really trade the macro, I trade the short term. I don't really care what happens on the charts, if I'm being honest. I trade the short term. But objectively speaking, over the hundreds of videos that we've done, okay, there is no data to suggest, other than speculation and weird on-chain data that is completely irrelevant, that we're going to go below 20,000, okay? You can draw your random lines, you can draw your stupid Elliott wave theory patterns that sometimes are valid, but for the most part are massively objectively biased, okay? Or massively biased, sorry. There is nothing that is saying we're going sub 20,000. We, in fact, have a significant amount of support that we need to break below before 20,000 even becomes a logical target. Why would you aim for here if we've got 10 levels of support that we need to break through to get there? It is irrational, it is illogical, it is emotional, it is biased. People expecting $20,000 are either sad that they haven't bought Bitcoin yet and it's been going up, or they were expecting the correction that everyone was saying, we're going to 35,000, we're going to 32,000 on this move over here to go much lower than it did. And we told you guys right at the bottom, the low is going to be much higher than it was, and it was much higher than everyone was expecting, sorry, and it was in fact, and everyone was expecting lower prices here, took massive amounts of shorts, and they are now underwater. So again, guys, you have to take yourself out of what is going. You can't predict what is going to happen every single time, okay? You shouldn't expect yourself to. Furthermore, it is not about being right, it is about making money. So stop getting caught up in emotions. If you're wrong, let go of the bias, move and adapt your analysis. If the price action is going against you for a large amount of time, you're probably wrong in your overall assumptions, your overall assessments. So adapt and change, okay? Who cares if you're right? We have been right on this channel for God knows how long. We told you all the way up over here, selling 64k, going bearish. This was a fake out pump. It's all on the channel, guys. We bought at 16.5 to 18k. We've been bullish ever since. We told you guys a monthly candle close above 32,000 will result in a retest of 48k, which it did. Every single move we have been dead accurate. No one cares. It doesn't matter. What matters is that you make money, which we have done so. We're telling you again, guys, the charts are not suggesting 20,000 as of right now. That could change if we start to see breakdowns of 38k, if we start to see a retest of 32k. That is when we could start to look for those lower targets if this yearly uptrend breaks. But to assume we're going to break down from major supports, a yearly uptrend, even when the charts are looking relatively bullish, the interest rates are potentially going to be dropping, the ETF adoption is starting to pick up, money is flowing into the space, we're moving into the 4-year cycle bull run phase according to historical data, and according to all our technical indicators. It is a wild assumption to make. So again, guys, do not get trapped. I've been in the space for 8 years. I've seen every single cycle. People get overly emotional. The higher the price goes, people start calling for ridiculously high targets. Last cycle, guys, we told you 72,000 was the top. We predicted 72,000. We told you over here that we didn't think the price action was going to go over 72,000, went to 69k. But the amount of people telling me Bitcoin's going to 400,000, 100,000, even 120,000, 300,000, it was insane. I had to block them all out because it's just noise. When I told you 64k was the top and I was selling, everyone told me I was wrong. When I told you 16.5 to 18k was the bottom and I was buying, again, all of this on the channel, people were telling me I was buying early. We're going to 12,000, we're going to $3,000. Wild predictions, okay? And we're seeing the same thing again. As we approach, it's a common occurrence, guys. Happens every time. We've been in the market for a long time. If you've watched the channel for a long time, you would notice the pattern. As we approach these major trigger points being levels of resistance or support on the macro chart that actually flip the trend, okay, or change the strength of a trend from a monthly uptrend to a yearly uptrend, or from a weekly uptrend to a daily uptrend, or whatever it be, it changes the macro trajectory of the trend. Emotions start to pick up a lot. People get very emotional at these levels. So the best thing you can do if you find yourself emotioned out or stressed out is just take a step back, let the price action play out, and then make your decisions, okay? If you're calling for $500,000 of Bitcoin, you're a spastic, okay? You're just out of it. If you're calling for 3,000 for Bitcoin, you're really pulling at straws. It makes no sense. Anyway, guys, let's go ahead and jump into the monthly chart. And, you know, you like it or don't like it. I really don't care if you think that's a stupid assessment, or it doesn't matter, guys. At the end of the day, we make money, we profit, we know what we're doing. If you think that what I told you goes against your narratives and your biases and you're upset, you're going to have a rage fit in the comments, feel free to do so. But at the end of the day, it's not going to help anyone. It's not going to help yourself. So good luck with that. Let's move over to monthly chart, guys. We do have the monthly candle closing in 2 days. Again, a level of major significance. If we take a look at our key levels of resistance on the monthly chart, we have our dotted trend line over here, our dotted trend line over here, our dotted trend line over here. The dotted trend line reflects the dead cat bounce high from the prior low established within the bear market cycle. So the first low established is a horizontal trend line, the horizontal trend line, the horizontal trend line. The dead cat bounce, the first dead cat bounce from that low makes a high, and that high point is now going to be our dotted trend line. This level acts as a yearly level of resistance, in every single instance. We can see every single time we retest it, we reject. We saw a rejection over here. We saw a rejection over here. We're seeing a rejection over here. The same thing is happening again, like we said, okay? Now, the most important thing about this rejection is that in the prior instances, rejection did not take us to close a monthly candle below that solid trend line. Even during the COVID-19 crash, we managed to remain above that level. So in this instance, the most important level Bitcoin holds above to keep the 4-year cycle moving as expected, as we have seen, to keep the yearly uptrend upward, needs to remain above 32,000. So to think Bitcoin's going to below 32,000, we have no data to suggest, is a little bit ambitious. And to want Bitcoin to go to sub 32,000 to 20,000 would be to want the cycle to break. And if you want the cycle to break, that is going to be counterproductive for your overall personal needs, which is that you want to make profit, right? Everyone wants to make profit. It doesn't matter if you want a $3,000 Bitcoin or you want a $50,000 Bitcoin, you want to buy it now or you buy it 10 years. The overall assumption is that you want to make money in the market, okay? And the vast majority of people struggle to trade trending markets. They struggle to trade down moving markets, they struggle to trade stagnant markets. So the average Joe, which is most viewers, which is fine, it takes time to learn. A lot of people on this channel are quite new to Bitcoin, quite new to cryptocurrency. The greatest chance you have at making significant profits is in a market that is trending obviously and aggressively for a long period of time, which in this instance is going to be an extended bear market, okay, or an extended bull market. And the best chance you get one of those scenarios is that we follow what we have seen in the past. Anyway, guys, keep your eyes on that 2-day close. Thank you for watching. I hope you have a fantastic day. I'll catch you guys on the next one. Cheers.